Good day, everyone. My name is Michael Frentiades. I'm the Chief Economist here at xm.com, and here is your European Open briefing for Thursday, December 7th. So, what should you know about today? Well, the yen has retreated a little bit. Risk aversion does not seem to be spreading. Selling in risk assets has mostly stopped, so the yen has taken a back seat yet again. The antipodian currencies are on the back foot today. That is New Zealand and Australian dollars. Sterling is also a bit under pressure. The Canadian dollar has dropped on dovish Bank of Canada. And for the day ahead, I think the focus is mostly on tomorrow's jobs report. We have a Eurozone revised third quarter GDP. We have a Draghi speech later on today, although I'm not sure whether that's going to be a market mover. UK house prices, US jobless claims, and Canadian IV PMI. On to dollar yen. The dollar is back to the 112.50 level. Risk assets have stabilized. There are modest losses also for the yen against the pound and the euro. So dollar traders are optimistic because there is starting to be some contacts between the Senate and the House in order to pass the tax bill. We also had the Japanese leading index today, its release. That was a bit positive, but not boosting the yen much. Now, we also saw a sharp sell-off in the loonie. We're talking about 2 cents in the space of a couple of days. What happened? Well, the Bank of Canada yesterday, it released its statement. It sounded cautious and did not signal rate rises in the near future. So probably rate rises are being pushed out into the future for Canada. So that is maybe hurting the loonie. And also we had oil prices drop even as Energy Information Agency inventories fell more than expected. There are concerns that there is a slow demand growth, that there is a growing US supply, and that seems to be weighing on the oil and could be having an effect on petrocurrencies also. The pound, from its part, is finding the going tough. It's not having any positive news on Brexit. You see an attempt earlier in the session to test the 134 level. It failed, so we are back to 133.76 for pound dollar. The issue of the Irish border seems to be proving a sticking point in the Brexit negotiations. May is also facing some criticism within her own party about giving too much away to the EU, so it's kind of hard to strike a compromise when one is faced with such a background. And there is the most likely event is that there won't be a deal before the EU summit in a week's time or so. So that's bad news for sterling and for those who were hoping that we could get a deal and that Brexit negotiations could move on to trade. On to the antipodian currencies. You see the Aussie, the yellow chart, was pushed lower. We had a much smaller than expected trade surplus for Australia. That was a big miss, by the way. We also have some commodity weakness, mainly in gold and oil. I would not say this is spreading to other commodities that Australia might be exporting, today at least. And we have the Kiwi following the Aussie lower, also posting a significant drop, although there was no significant or major data out for the Kiwi. As I said in the beginning, minds are mostly on tomorrow's non-farm payrolls and the tax deliberations. At least that's for the US dollar. We also have the revised third quarter GDP out of the Eurozone. We have initial jobless claims in the US at particularly low levels, around 240,000. We have the Canadian IV PMI and the Draghi speech later in the day, but this is most likely going to be on regulation and as part of the Basel Committee on of central banks, and they set regulatory standards. That's all from me today. Thank you very much for watching and have a great day.